Good morning. This is the Option Pit AM Volatility Report. I'm Mark Sebastian, founder of OptionPit.com. Reminder, none of this should be considered investment advice. Anything you say, consult a financial professional. This is for education purposes only. All right, hey, we've got our beginner boot camp still going on. You can go to optionpit.com/begincamp, and you can catch the recording from the previous day, and you can catch on live. There's gonna be all sorts of stuff. I mean, it's 9 hours of live and interactive education, considering you get the silver course for free. So, come check it out. I'm teaching tonight. It's going to be a good time. So, here's the market. What do we got? Well, you got oil off a touch, but not down big, and you got the market green on it. So, one thing we're noticing is that the oil market kind of compendium, the way they all are interrelated, is starting to break apart. Oil was down huge over, really 1.5 days. And at worst, the market was off $50 on what amounted to an 8% oil move. Not exactly a huge move, and something that, oil down $5-10 in the past would have, or 5-10% in the past would have meant, potentially a 3 to 5% move in the S&P 500, and it resulted in less than 2. Plus, it turned around. One thing we are noticing, all right, in terms of this is kind of how it's played out in VIX. And if I pull up the VIX futures curve, it briefly kind of went flat yesterday, but we are in a contangoed curve. Cash is trading below March by about $1, which is trading below April, which is trading below May. So that piece of the puzzle is coming together. Additionally, VVIX, the VIX of VIX, the volatility of vol, is consistently at levels we've not seen since last summer. I mean, if I pull up a 6-month chart, we're basically at the lowest level since in the last 6 months, and we're getting to levels that really go back to when, when we were just worried about Greece and Fed. You're not seeing the same vol explosion. Things have seemed to have somewhat, at least in the near term, gotten a little more normal. Now, we did have a couple of bouts of this in November and December, but we've not had anything since kind of middle of December of volatility staying consistently below 90. I think that's important to be aware of and recognize. And it's something that's going to maybe drive VIX to a little lower here for the next few days. I'm not saying that this sell-off is over, but I think we're in a breather. I think we're at a pause between now and, maybe non-farms, maybe kind of as we approach the Fed in March is really where we're going to kind of see this action and where we're going to get paid out. Looking across kind of individual names, you can see GLD continues to fly. It's up a little bit, but its volatility, the GVZ, is fully priced. 25% for how much gold's moving around, that is fully priced. Where things are not fully priced, VXTLT. TLT is bouncing around. Look at the size of some of these candles that we get in TLT. Just in the last, few weeks. And so you've got a situation where they're letting near-term vol kind of sit at levels where volatility is moving. You literally need to go out 90 days to see volatility below where it's trading. And, it makes me think that there's some opportunity to trade in and around it. That volatility is probably a little underpriced, and if there is an area that I want to own premium, that continues to be it. USO, oil, OIV. That index hanging around 65. It's been high, but it's been way higher. I still think oil premium is a sale at these levels, and will continue to be a sale at these levels now that we've seen things kind of max out. Trades we like in USO, we've put out there pretty aggressively. We have one on in the strategy letter that we like a lot. And you know, across some individual names, you have after the bell, you've got gap earnings, which are kind of interesting. We saw a huge buyer in the last week of the of the Feb 25.5 puts. I'll be interested to see whether that trader comes back in. But there was some huge volume a couple days back, and there's some decent open interest on those. So that's one of the little unusual activities that from the days past that I was watching. And then aside from that, I think you're going to see the S&P probably stay green on the day. But it's interesting that volatility is kind of hanging around where it is. Today may be a breather after kind of the major whipsaw we saw yesterday and the huge rally Monday and huge sell-off Tuesday. So, maybe the market does need a break and a breather, and that could be what we're seeing today. All right, folks. If you have any questions, you can email me, market@optionpit.com. You can call me 888-TRADE-01, and hopefully I will talk to you soon, and I'll see you real soon. Thank you very much.